Joining me now is Angelo Zeno, SVP and Technology Head at CFRA Research. Angelo, nice to see you again.
Great, thanks for having me, Ashley.
All right, so Wall Street is laser focused on Nvidia earnings due today after the bell, and I understand you expect Nvidia to beat consensus by at least $1 billion on revenue. What do you think would drive that strength, and how does it compare to earlier quarters?
Yeah, so when we kind of look at the numbers here, Street's looking at about 55 billion or so for the quarter. We're looking for at least 56 billion. That would imply, a high 50s year-over-year growth rate. You're looking at sequential acceleration of about 18%. Now, a big reason for that acceleration is because in the prior quarter, they had to absorb some of the hit in terms of zeroing out the China revenue. So you also, in addition, have the ramp here of Blackwell Ultra, in addition to the ongoing ramp of Blackwell. So we do think the momentum continues here. You look at the hyperscaler spending, what we've just seen over the last couple of weeks from Q3 earnings season, the Microsofts of the world alluding to, just 3 months ago saying that they were going to moderate spending over the next year to now expecting to accelerate spending. So their narrative has changed to one where expect kind of spending to be stronger than anticipated looking out into the next year. So the beat and, in terms of the guidance, looking at about at least 61 billion is going to be the barometer to look out for the January quarter. Again, it's going to have to be dependent on that data center business, which is nearly 90% of their revenue. And given what Jensen just recently commented on about 3 or 4 weeks ago at their GTC event in DC, basically pointed to a $500 billion backlog here over the next 5 quarters. We see little reason or risk that they're going to miss these numbers.
And Angelo, you mentioned those data centers, and you say data center revenue could hit $49 to $50 billion. That would be up nearly 60% year over year. How much of this growth is tied to AI demand, and is it sustainable?
I mean, at this point in time, it's essentially all AI driven, right? I mean, you kind of think about just where the pockets of demand, where the supply constraints are in this market at this point in time. It really is for these AI workloads. And when you kind of just look at what we just saw again after Q3 earnings season from the likes of Microsoft and Alphabet, they essentially talked about just absolute surging demand for their bookings. And again, that's going to translate to the need to spend more aggressively. So the visibility we think here over the next 2 years from these hyperscalers is extremely strong. And again, that I think should instill greater confidence here for investors as they kind of throw out their numbers here this afternoon.
And I understand that you expect gross margins to climb by 73.5%. Can you break down what gross margins measure for our audience, and what do you think would be behind that improvement?
Yeah, I mean, so, I think when you look at the Blackwell ramp here that we saw late last year into early this year, there were some constraints to the profitability of Blackwell. A big reason for that is just a number of bottlenecks across the supply chain. This was a new architecture in terms of Blackwell moving from Hopper, and as a result, there was just higher ramp-up costs associated with that ramp-up. So, given that, we've seen kind of higher than anticipated costs here over the last 9 months or so. Some of those costs are starting to alleviate, not to mention you're getting the greater scale. So we saw something along the lines of 72.5% in the July quarter. We think that accelerates here or expands to about 73.5 here in the October quarter, and as you look towards the January quarter, we think that further expands to about 74.5%. What's also important is as you move towards Rubin, the next generation GPU ramp in 2026, Rubin runs off of the same architecture as Blackwell, so that should continue to allow Nvidia to have those mid-70s gross margins. We think is great for the profitability of the company.
Why do you think so many eyes are on Nvidia, and what could the impact of their earnings have on the broader markets?
Yeah, I mean, listen, I think as far as the importance of Nvidia, they're now 8% of the stock market, right? So they are just an absolute important barometer for the stock market. They're an important barometer, I think, for the overall AI ecosystem. If you think about the largest sub-industry group in the stock market, it is now semiconductors, and essentially every major semiconductor company sells to some extent inside of Nvidia's ecosystem into their servers. So it's extremely important for them to continue to demonstrate and show that they're going to, they have that visibility and they're going to continue to grow. Not only past this quarter, because the expectations going into the numbers I think are pretty good, but more along the lines of looking out here 6 to 8 quarters is what investors are more interested in. And again, we do expect Nvidia to provide that clarity here on the call. So, I think just the importance of them to the semiconductor industry, the market itself, and then the overall AI ecosystem. If you continue to see higher spend from Nvidia, it likely means that the fundamentals and the expectations from their customers, the Microsofts, Alphabets, Amazons of the world, also continue to be very strong. So a number of reasons why we should be looking closely at Nvidia, but the importance can't be understated at this point in time.
All right, thank you, Angelo Zeno, SVP and Technology Head at CFRA Research.
All right, thanks for having me.
Still to